If you gave me 2 million shillings in Kenya today, this is exactly how I will invest. So I share a step-by-step guide on how you would invest a particular amount of money. This is part of my How I Would Invest series, where I show you a step-by-step structure on how you can invest a particular amount across different investment vehicles, from 10,000 all the way up to 10 million. And I use practical Kenyan opportunities that have been proven to work. It's important to note that this is not financial advice. It's an educational research and look a deep overview of how I will personally diversify 2 million or any other amount that we shall be sharing in this series. So we shall be looking at different vehicles: SACCOs, treasury bills, special funds, money market funds, and then Nairobi Securities Exchange, NSE. And I've added something special. This is personal development and skill building, just to balance. And as I'm doing this, I'm looking at certain features. I'm looking at safety, liquidity, growth, and personal capacity to grow and just be able to make that money grow. Why? Because no matter how much money you invest or how much you diversify, the greatest investment that you'll ever make will always be in your own skills and in your own mindset. I've done a video on how to invest in yourself. I'll attach it somewhere here or somewhere here. So if you've been wondering on how to invest a particular lump sum in Kenya wisely, this video will take you through a step-by-step process on how to build your portfolio, and this will protect your money, generate income, and grow your money over time, while at the same time helping you to grow as an investor and as an individual. First things first, setting the framework. Before you start investing, it's paramount that you state your framework. And I like to think along 4 layers or 4 layers of thinking. When investing, the first thing that you should look at is safety and liquidity. How safe is your money? And how liquid is your money? When you want to access your money, how faster can you access your money whenever need arises? Number 2 layer of thinking is income stability. What kinds of assets, when you invest in, will give you steady returns? That's basically income. Layer number 3, I look at growth and appreciation. What investments will make my investments to grow, will make my capital to grow probably faster over a long period of time? And then finally, you won't find people talking about this, but it's important that you invest in skill development and personal growth. Some people will call it capacity building. How can you and me grow individually so that I am able to make more money, manage the money that I have, and multiply it? That is why in the different investment as classes that I'm talking about, I am also including personal development as another portfolio. So the goal is, I've always talked about this, the goal is to allocate money in a way that cash is always working for you without exposing you and your money at a risk. Remember, I always say that investment is a game and you should always stay in the game for long. The moment you lose cash, you are out of the game and technically you can't keep investing. Now, let us have a breakdown of how I'll divide the 2 million Kenyan shillings. Number 1, I'll put some money in a money market fund and I'll put 20% in a money market fund. I've done videos on how to invest in a money market fund. I use a Tika money market fund. I'll attach some videos for you here or here to have a look at them. 20% of 2 million is 400,000 Kenyan shillings. Now, I'll invest this money in a top tier money market fund. We've done reviews on the top money market funds in Kenya right now. Now, why money market fund? Because MMF will give you daily interest, will give you easy liquidity whenever you want to access your money, and this makes sure that money market funds are perfect for an emergency or anytime you need your money quickly. The average returns in Kenya for money market funds is between 9% and 11% per annum. This, of course, depends with the fund. You might have others going up to 12, you might have others going all the way up to around 8, but the average is 9 and 11%. Why am I putting money in a money market fund? Because this allocation ensures that I can access cash quickly whenever something comes up. Say you have a business deal, say you need money urgently. So money market fund, because of the liquidity feature aspect, will enable you to access that money quickly, and at the same time, you are earning the interest on the same amount of money. It's paramount to note that whenever selecting a money market fund, check to make sure that it's regulated by Capital Markets Authority. And because they are regulated, this makes them one of the safest and most transparent points for entry or for investing. So I'll put 20% in a money market funds for the reasons that I've discussed on. Number two, I will put 25% of the 2 million and in a Sacco. 25% in a Sacco. This equates to 500,000, 500,000. I will put this money in a strong, transparent Sacco. I'll have to make sure that this Sacco is regulated by SASRA and is known for consistent dividend payouts. I've done videos on how to invest in SACCOs. I'll link them in the descriptions. Now, why SACCOs? Because SACCOs are ideal for two things: medium-term savings as well as loan access. You can earn dividends annually when SACCOs pay their people who own shares, and SACCOs pay around 8 to 12% to the dividends as their dividends. Similarly, I can borrow money at about 1% per month on a reducing balance, much lower than any bank in Kenya right now. Why this option better? This option is great and better if you, at some point, you want to use your savings either as a collateral for business or you want to develop real estate opportunities. So you can always borrow against your savings, and this will enable you to do a larger project, because SACCOs, when you are borrowing from SACCOs, they'll give you times 3, times 4, or times 5 the amount of your savings. So if you had saved 500,000, 500,000, and you have a project for 1 million, 2 million, 1.5, you can always borrow times 2, times 3, or times 4, or even times 5 the amount of money that you need for your project. It's paramount to understand that always vet your Sacco carefully. Look at governance, look at liquidity, look at transparency of any financial institution before you invest with them. So I've said I'll put 20% in a money market fund, then I'll put 25% in a Sacco. So let's continue with this party. Now, I'll put 25% in government treasury bonds. 25% in treasury bonds. And this again equates to 500,000 or a million. If I want something long term, I want safety and I want a predictable income, I'll invest 25% on or in treasury bonds. Now, treasury bonds are issued by Central Bank of Kenya, and they pay an interest for every 6 months and have got maturities that range from 2 to 20 years. And the good thing about bonds is that their yielding capacity, they yield around 14% to 18 or 17%. In 2025, they have averaged 14% to 17%. Here's the kicker. I'll focus on infrastructure bonds. Why? Because infrastructure bonds are tax-free and they are aligned with the national projects. I'm giving back to the government. The good thing about bonds is that they offer stability and then they are predictable, because when you're buying bonds, you are buying them at a predetermined rate. If it's 15%, the rate is already predetermined. So this is a predictable cash flow, and it can as well serve as collateral whenever you want to do something. Let's recap. 20% money market fund, 25 in a Sacco, 25 again in treasury bonds. Now I'll put 10% in special funds. I've done a video on how to invest in special funds and types of special funds that are available in Kenya. That video has been performing well. I'll attach it here for you to have a look at it. Now, I will allocate 10% to special funds. Now, these are non-traditional investment products from licensed firms, such as like the Mata X or the OC. They invest in alternative assets, they invest in private credit or any high yield fixed income assets. Special funds, they pay 12 to 14% plus annually, but they come with higher risk. The higher the returns, the higher the risk. But the rule here is that you have to make sure that the special fund that you are investing in is regulated by Capital Markets Authority, regulated and approved, to avoid anything that any firm that promises you unrealistic returns, like giving you 50% or 60%. So make sure that the special fund that you're investing in is regulated by Capital Markets Authority. If you want a deeper breakdown of how to invest in any of the special funds, leave the comments below, then I'll have a look at it. Now we have done 70%, 80%, we are remaining with 20%. Of those 20%, I'll put 18% of the 2 million in the Nairobi Securities Exchange, NSE. These are the shares. So why would I invest 18%? I would invest 18% in the Nairobi Securities Exchange, but I'll focus on blue chip stocks. These are proven companies that have consistently been paying relatively higher rates. I'll look at Safaricom, I will look at Equity Bank, I will look at KCB and East Africa Breweries Limited. These are companies with solid fundamentals and have been consistently paying dividends. It's important for you to note that the stock market is always volatile. It goes up, it goes down. But in the long run, it's a long-term game. In the long run, you'll always get, it has got growth potential. We have got 2% that is remaining. And this 2%, remember what I talked about when we were starting, I'll put this 2% in personal development, skills development, personal development. Now 2% equates to around 60,000, not around, equals to 60,000. Where specifically will this money go? This money will go to professional courses. This money will go to coaching. This money will go to mentorship. This money will go to business coaching, will go to communication or financial skills. What most people do is that they invest in other vehicles and they neglect to invest in themselves. When you invest in yourself, you become much, much better. You acquire knowledge, skills, and expertise so that you can manage your 2 million better. If you invest money in the business coaching, for example, or in financial literacy, for instance, you'll be able to have the mental ability, the business capability to manage that money better, to start and grow an enterprise better, as compared to someone who hasn't gained that particular knowledge. It's always important for you and me to understand that when you invest in yourself, you grow very many different aspects of yourself. So invest in yourself. So the 2%, the 60,000 will go to personal investment. This is a recap or the bigger picture of what we've said. 20% in a money market fund because of safety and liquidity. 25% in a Sacco because of income, dividends, and loan access. I'll invest 25% in Treasury Bonds because of fixed and long-term income. Then I'll invest 10% in special funds because of high yield opportunities. I will invest 18% in stock exchange because of growth and dividend payouts. Then I'll invest 2%, which is 60,000, to personal growth and earning. So this is a diversified plan that spreads the risks across regulated channels, whether it's CMA, Capital Markets Authority, SASRA, the body that regulates Sacco, and Central Bank of Kenya, while at the same time preserving a portion to strengthen you as an individual, increasing your ability to earn more and multiply the money that you have. So if I were to invest 2 million, that is how I would balance. I would balance stability, income growth, and self-development. Now, the key lesson here is I diversify intentionally, not just across different investment assets, but across my own potential. Remember that anytime you have money, some of the money will work for you, but some of the money should work on you. That's why I included the personal development, because skills, knowledge, relationships, coaching, they compound faster than any market will ever compound. You can learn a skill today, or you can learn a concept today, and that concept is able to give you 10 times the amount of money that you had initially. So never put all your money in one place, and let each shilling have a purpose. Allocate every cent a purpose. Some for security, some for growth, some for opportunity, and some for personal capacity. So that's how I will invest 2 million Kenyan shillings. I would love to hear from you how you'd invest your 2 million Kenyan shillings. Thank you for watching, and I'll be seeing you in the next video. All the videos that I've mentioned, I'll leave them in the description for you to have a look at them. So until next time, thank you for watching.